I signed up when I was 17 years old. I had to have my parents sign the like permission form, which is kind
Wow.
of funny. Like, you're going to the military, you're supposed to like be an adult now, and then they're like, but your mom has to sign.
So you're 17. Like, what was the impetus to be like, I want to join the army?
I think there's two things. One was kind of like I wanted to test myself, like could I do it? Like look, kind of crazy and fun. And then the second part was I'd graduated a semester early from high school, and I knew I was going to go play football in college in the fall, but I had like this window of time, and I was like, oh, I'm just gonna like hang out. This would be awesome. Like this would be so fun. And I got bored after like 2 months, and so I think it was kind of like, okay, the timing works. I get like basic training, do all this stuff, and then go to college.
Yeah.
Why not? And at the time in this 2006, the surge was like this big push to get tons of people into Iraq and Afghanistan, and they're paying signing bonuses, and so like they
Ah,
dangled like a
okay.
20K check in front of me, and I was like, wait a minute, you're gonna give me $20,000, you're going to let me like go play, like this game, have fun, and I get to test myself. Like, where do I sign up? And so they're very smart about how they, kind of create all the right incentives and marketing.
Yeah, and that's kind of like not that far after 9/11. So I think the popularity going to the military was much higher than it is today. And then did you know right away you're going to be?
No, I signed up for a contract that basically would allow me to go to school, play football, and then afterwards I'd owe them active duty time. But you have to be an ROTC, and so when I was in college, I was playing football, I was doing the reserve duty plus going to school, and so ROTC just didn't work. It's a little bit of a gamble. I probably didn't understand the gamble that I was taking as much as I should have.
Yeah.
And they called me up one day, second week of junior year, and they said, in 2 weeks we're leaving to like go to training, like you're coming. And I was like,
Wow.
no, I'm not. Like, what do you mean? And they're like, let us explain how this works. Like, you're definitely going. And so
Did you freak out? Was that a scary moment when you found that out, or?
it's just like unknown, right? You're like, is a serious, like, you almost like call back, right? To make sure it's the right person that called you, right?
Right. Yeah.
And so I went and I withdrew from school. They were fantastic about, dealing with the whole situation. The hardest part was actually going to tell the football coaches, because like, you're like 18, 19-year old, or I was 20 years old. So you're a 20-year-old kid. You're like constantly like kind of screwing around, joking around with the coaches and stuff. So you tell them and they're like, okay, like, haha, fun. Like, just make sure you're at practice.
Right. Right. Yeah.
Right.
They
Right.
didn't
They're like,
believe you.
they're
Yeah.
like, all
Yeah.
right, yeah, yeah, yeah. Like, I actually think that week we had like called one of our coaches and been like, our star running back, like, dude, he just bugged out. Like, dude, he's going to the train station. Like, he's gone. He's out. Like,
Wow.
you might have to go get him. And the coach was like freaking out, right? And obviously we're playing a joke on him. So then I come in and I'm like, I'm getting deployed. He's like, guys, stop, right? And I was like, no, 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 seriously, like I just withdrew from school. And so it was great though, because at 20, I deployed with a lot of guys that were older than me, and like, they're married, they have kids, they got mortgages, like they're like living their real life. And I had the benefit of, they all respected me. I'm coming from playing college football. I'm like the younger guy. I'm probably in better shape than them, and can kind of do a lot of stuff that they maybe aspire to do.
Yeah.
But at the same time, there's a lot of balance, because I'm probably the like stupidest guy there in terms of every dangerous situation. I'm like, let's go. Like, this would be all, like whatever. And they're like, hey
Like,
man,
dude.
something happens to you, like your mom cares. That's it. Something happens to us, my kids, my wife, all this kind of stuff. So it really, I think, helped me mature and kind of balance out maybe the enthusiasm that I had.
I don't know if you're allowed to say this, but where in Iraq were you and how long were you there for?
I was stationed out of a large camp called Camp Taji. It's like 12 miles north of Baghdad. And then we spent a lot of time in a place called Mushata, which is like right up the road. And we were there really kind of end of 2008, towards the end of 2009, which was, again, kind of the best time to go, because 2006 and 7, there was a lot of really heavy fighting in kind of the north of Iraq. And so if you think about in a war, you kind of are like pushing people on a battlefield, right? So like you start out, nobody from America's in Iraq. You immediately infiltrate and invade the country. You get to the heart. You're like, okay, we've taken over now. We're in charge. Everyone scatters from like quote unquote the other side, right? So like Al Qaeda scatters all over the country, but then they have time to regroup. So by like 2005, 2006, there was really really heavy fighting, because they were able to kind of coordinate now, and so there was this huge surge. So if you see guys like Jocko Willnick, or people who are like fairly popular podcast, stuff like that. A lot of those guys were in the northern part of Iraq, because we were sending a lot of the Navy SEALs and kind of larger teams in 2006, 2007 to go fight there. And so they kind of busted that up, and then these guys all scattered again. And so when I was there, there were still some of those guys who were kind of trickling down, but they were basically trying to figure out like, where do we go? Like the Americans just keep coming and finding us, right?
Right. Yeah.
Which maybe means we're doing a good job, but for those guys, it's a bad day.
Yeah. That's a real bad day. Yeah. How did that change your perception of the world? I mean, at 20 years old, I mean, you're probably so impressionable. Like, how did that change your view of America, the world in general? Like,
I think it's there's a couple things. One is nobody on the ground is like in a firefight in a dangerous situation, like everything you're told about the military falls out the window, and you're just like, dude, I want to live, and I want the guy next to me to live, right? So it's like the most barbaric survival mechanism takes over, and you're like, I don't care what the flag on my shoulder is, I don't care about what the politician said, like all of that goes out of the window, and you're just like, I want to live, and I want this guy to live, right? So that's I think one piece. The other piece is you have the news, like you see what they're saying on the news, and you're like, dude, I don't know where they're fucking talking about, right? Like, I don't know if you guys saw during the one of the presidential debates. I think it was, I think it was Kamala said like, we don't have anyone deployed like overseas. And then there was like some soldiers overseas in a war zone, and they like filmed themselves. Like, well, where the fuck are we? Right?
Yeah, right.
Like,
It's just a Hollywood
like,
set.
yeah. Like, so like, I mean, there's some of that stuff that goes on. And then the other thing is just interacting with the people that live there. There's two
Yeah.
big takeaways that I had. One is like, there's a lot of people who just like, they just want to live their life. They don't care about, Al Qaeda. They don't care about the U.S. They're just like, dude, I just like want to live my life. And I always say that, imagine if somebody like invaded New York City. Majority of people would just be like, dude, just leave me alone. Right? Like if you want to like go fight or something, like just like go do that. I don't know. If I live uptown, like go do that downtown. If I live downtown, you'd be like, go do that uptown, right? But just like let me go to work, let me live my life, all that kind of stuff. But then the other thing is, it's the only time that I've actually like looked someone in the eyes and seen like pure hate. Is
Wow.
The one that probably resonated the most is we were driving down the road one time, and there was like a 14, 15-year-old kid. And he was just looking at you. You're just like, if this kid could, he'd kill me. Right? Like he's just looking at it, and you're just like, by the way, like this is why these wars are like impossible to win. Because okay, we go, we do our thing. Well, 2 years later, there's a whole crop of these kids who are growing up, and they're like, dude, you killed my dad, you killed my uncle, you killed my neighbor, whatever, right?
Yeah.
And it doesn't matter that we're like, well, he shot at me, right? He doesn't care. He's just like, I hate you. And so the big takeaway is just like, it's really messy. It's really complex. And so America's very good at invading, and like, we have the strongest military in the world for a reason. We are not so good at the nation building stuff. And I think a lot of veterans that I know, they're just like, look, man, let's just stay out of the wars, right? What is the purpose of this? And so on one hand, in Ukraine as a good example, like we didn't engage in maybe the way we would have if it was 20 years earlier, right? We didn't like get a bunch of troops and send them there and like fight the war ourselves.
Is that because we learned lessons from the Middle East, do you think? Or
I don't know, right? Like,
right, yeah.
There's one argument that we learned lessons. There's another argument that like we'd, weaker leadership. There's another argument that we kind of are scared a little bit of like what Russia would do. And so if we sent troops, it would like ratchet it up. I mean, there's like a bunch of different, ways, and then probably there's truth in each one of them, right? We probably did learn lessons. We probably were
Yeah.
scared of like ratcheting it up. We probably also were happy to like operate in a proxy war or whatever. But the reason why that's interesting is you now have a lot of these veterans going into policy making decisions and positions. So like Pete Hegseth, being the Secretary of Defense, is actually really important for investors' portfolio, right?
Why?
Because if you think of the way that Pete publicly talks, his whole thing is like, we should have the sharpest military in the world. We should be the best war fighters in the world, so we don't have to go to war. That is not the way that it was talked about for 20 years. It was, we are going to war. We are going to be the best. We are going to dominate on the battlefield. And so a lot of the veterans that over the last 20 years, what they realized is like, can we win the wars without fighting them?
Yeah.
And so all of a sudden, defense companies, actually, you can make an argument like the revenue is going to increase because we want to have the readiness. But on the other hand, like they make more money when we're at war. So if we're avoiding war, like maybe they're actually weakness, on the horizon. And so you start
Right.
thinking through these like ramifications of also like what type of revenue in some of these companies. So a good example is like Anduril is very tech forward. They're building a lot of drones. Like drones have completely changed the battlefield. And if you think about drone warfare, one, you're not putting human lives at risk. That's positive. But now what you've basically done is you're taking away a ton of revenue from certain businesses where they're building, tanks, they're building Humvees, they're building like all these things that are human specific.
You don't need that type of right. Yeah.
I mean, you would go in Iraq and you'd go to like what they call like a motor pool. There would just be lines, like a parking lot full of vehicles. Each one is, I don't know, hundreds of thousands of dollars, right? Maybe more. And so you think to yourself, like, all right, well, like the future of warfare may not actually involve any of that stuff. And so it has massive ramifications because then you think about like, well, what about all the companies that are providing food? What about all the defense contracting? What about all the companies that were building the like the actual places where we slept? Right? Like all of that is economic activity. And so it's like very weird to think about veterans who now have a propensity to avoid war could have a massive impact on like certain companies in the stock market.
Well, it's kind of I like that's a contrary belief because everyone feels like because there's been so much more turmoil in the world that we're just going to see that military budget go up. But to your point, because of efficiencies, because of technology, we might actually spend less with more impact, which actually, I guess, from a social situation, that's like probably the ideal situation where we don't actually have to go to war.
There's also a switch in the way that a lot of the technology is getting built. So the U.S. military generally used to operate on what they call like a cost plus model. So what they would basically do is they would go to like, I don't know, Lockheed or whatever, and they would say, hey, we need a certain type of tank. And Lockheed would say, okay, well, here's our cost plus 15%. And so that was the entire model. But like if somebody else is covering the cost and you're going to make your 15%, cost $1 billion to make a tank, right? Like, I don't know. Like,
why not have cost overruns, right? NASA was rather the same way. Boeing made money, and then Elon came in with SpaceX, and all of a sudden it's like, wait a minute, this model's not so good.
Yeah, and I think that the way that it's being funded now, Anduril is building all the technology off their balance sheet. They raised a bunch of money, they fund the actual development, and then they could turn around and they sell it. So there's probably actually going to be a win-win where the government will spend less money, but Anduril will make more money. Like their margins will be bigger than what the
less overhead. Yeah,
they're operating a real business with economic incentives.
Yes,
so then you start to say, okay, and, I hate to pick on like the defense contractors, but it's like those businesses may look very different moving forward, even if there's actual, more wars.
Right.
So you start to compound some of this stuff and you just say like, hey, this whole sector is going to look very different than it did in the past. And you really got to understand, some of the nuances. So it isn't as simple as like, oh, we're going to get into a war by the defense contractors, right? It could actually be, no, you have to understand the buying and the funding of the development in order to actually understand where is the value going to accrue over time.
Yeah, and just the sentiment, right? You have different people now going to these roles. Was Pete Hegseth, was he actually in action? I don't even know.
He was.
He saw, yeah.
And by the way, he's like a pretty controversial person. Like, the vote was split 50-50 and the vice president had to break the tie. So it's not like he was a walk-in.
No, he totally wasn't. That's why a lot of controversy around him. But it's interesting. But he was actually a soldier in battle, which I think is pretty interesting.
Yeah, and there's been people in the past, they're generals and stuff like that. The issue I think is there's an ideological issue, and this is true I think across finance in general, is you really can split the world into kind of two different ideologies. One is like this ruthless merit-based kind of results-driven mentality, and then the other is, hey, should we be using the system incentives that we have to change behaviors, right? So if you look at like ESG, DEI, like those are like pretty obvious ones, but with Hegseth, he's pretty much coming in and he's just like, strip away all this. Like, we are just going to be the best warfighters in the world. And there's like a ruthlessness to it, right? And so he, when he goes to his confirmation hearing, has, I don't know, like 100 special forces soldiers that are showing up behind him. And they're like, yes, this is what we need. You go and, some of the retired generals, they're like, dude, this guy's, one, I won't say who it is, but like a general literally reached out to me. He's like, this guy's a douchebag. Right. And so like, you're like, but again, probably like both things end up being true, right?
Right. So it's not right. It's not an all or one proposition.
From one perspective, of course they don't like him. Right. Because
Right.
they're like, hey, he's like getting at the exact thing. He's very ruthless. He's like all stuff. So it's like very complicated. And then if you take that and you say, okay, forget the defense sector, just go to these other industries. Like Zuckerberg's gone through this, right? Like he comes in, he slashed 20,000 jobs. Like there's like a return to like ruthlessness and
Yes.
cost savings and merit and like all this stuff, which I think a lot of people didn't realize we got away from that.
I mean, that's when their stock started going up. No coincidence after they cut massively, which is kind of interesting because you actually worked at Facebook. What was that like? And I think at one point, didn't you work almost directly for Mark?
Yeah, it was a great place. Like I really, really liked it. I think people, they always judge. It always cracks me up. Like take Zuck as an exact example. Him and I are not best friends by any means, right?
Why not?
Yeah, he's cool. I'm not. Like he's very rich. I'm not that rich, right? But the times that I did spend with him, they were usually in kind of large team meetings. Like he would always meet with, I don't know, 8 to 12 people or so.
Not that
And
big. Yeah.
and my specific interaction with him was around how does he grow his audience on Facebook. And so he was very early in like the end of 2014, beginning of 2015 around how do I like go direct? I don't want to talk to the media to talk to the users. I just want to talk directly to them.
And that was the initiative you worked on, like growing audience, basically.
Correct. It was me,
So
the VP of
cool.
comms, executive speechwriter. There's, a team of people. And what was fascinating about it is he's like a normal dude, right? Like behind closed doors, I always tell my friend 2 stories. One, we were sitting there one time and he walked in the meeting and he kind of like his face was red. Like, like when a kid is like sweaty, but they can't actually sweat yet. Like he had that. So it was like he probably was sweating and not now, but he had sort of like overheated a little bit. And he was shaking a protein shaker. And so I was like, I don't know, I was like a 25-year-old idiot, right? And I was just like, Mark, do you work out? And then everyone in the room's like, shut up. But he was like, yeah. And I was like, well, fuck, we're already in the conversation. Like, what do you do? And he was like, well, I bench press sometimes. I like do it. And I was like, went home and I just remember being like, Mark Zuckerberg bench presses? Like, like holy shit, he's like us.
Well, it's funny you said that because I just listened to the interview on Joe Rogan.
Yeah.
And because the media does kind of portray him as this kind of weird dude, and you're like, he's like completely normal dude. The only thing annoying about that interview was, Joe Rogan had to talk about MMA, which you can tell Zuckerberg's kind of into it, but he didn't want to talk about it forever. And Joe Rogan just wanted to go on a tangent to speak about MMA, and it probably was high. But I really appreciate the fact you said that because I felt the same thing. Like this, he's kind of like a regular guy when you actually hear him speak.
Yeah, and also I think people mature, right? Like imagine if all of us were at 21 compared to now talking, right? Like completely different person. And one of the things that people forget is Kara Swisher did an interview with Mark Zuckerberg at the Recode conference in like 2011 or 2012. She was pretty tough on him. Is maybe the nicest way to put it. But he started sweating. And if I remember correctly, I think she made him take his sweatshirt off so she could see how much he was sweating.
Wow.
But she like embarrassed him on stage. And so he became very kind of drawn back from the media, all this. Like imagine, right? You're like probably not a super confident person. You're building your company. You're like a little bit more nerdy. You're on stage. It probably like took a lot of confidence to get up on the stage, do the interview. Your team's prepped you, all this shit. And then like the reporter is like, "You're sweating? Show us your pit stains," right? Like you'd be like mortified.
Shame. And he talks about that, how he hated doing those interviews because they're very short. The media presents you in a certain light. I mean, you can test this because you do TV, but you also have a podcast, and you have the I guess the platform's so different, right? This is like a conversation, and it takes you a little while to warm up and get into it. And he talked a lot about that actually in that Rogan podcast. So it's interesting you brought that up. Like he just like was awful doing those interviews.
So, but like fast forward to now, like he kind of like won. Right? Like you can have a lot more confidence when you're like, hey, this wasn't like a flash in the pan. It's not like the business only lasted for 5 years. He built this massive thing. He's been able to go into a lot of different sectors. And then the other thing is that, when I was there, after I worked on the team helping him, I went to a team called Social Good and Goodwill. And he had some of the people who were the longest standing employees running this team. And the whole mandate of the team was do not worry about making money. Just worry about like what good can we do in the world because of the size of Facebook. And that is like, to understand Facebook's culture, that's like blasphemy. Don't make money is like, you utter those words, you're not going to have a job tomorrow, right? Like that never gets said. And so things we built were like voter registration, Amber Alerts. There's like, when you get on Facebook, there'll be these like cards at the top of the newsfeed sometimes to like celebrate a birthday or a holiday and like those types of things. But I think that was part of the like maturation of the business and the maturation of Zuck is trying to realize like, hey, if we ruthlessly just focus on making money all the time, there's going to be a lot of people who aren't necessarily best served. And so how do we, kind of find a balance there?
Now, this is actually kind of ties into that. Do you find it interesting, like specifically Zuckerberg, he's kind of changed his political views, or maybe outwardly, since since Trump has become president, there's been a big shift there. Why do you
Yeah.
think that is? And is that because of the Biden administration and the way that they were clamping down on a lot of the content that got out there from Facebook and other?
Yeah, the intersection of business and politics is it's really complex. And I think most of us probably grew up and your parents always were like, don't talk about politics at work, right? Now everyone talks
Yes.
about politics. And
Politics and religion.
the way that I describe it is most people I know in business and tech or finance, they didn't care about politics. Even if they personally were like paid attention, they would never talk about it at work until politics started to care about them. And so the politicians started to go after the tech companies. The politicians started to go after, certain fintech or crypto or
Yeah.
whatever, to the point where people were like, dude, I have to do something here, or literally my business is at like a risk. Like the threat is the political apparatus. And so that's where I think you saw all of these people turn their head and say, you're not going to like mess with us, right? Like we are going to come together. We're going to create common sense regulation. We're going to, if you're debanking us and you're, discriminating against us, whatever, like we're going to fight back. And so I think that's why you saw this wave of people pay attention. The other thing is when I grew up, the Democrats were the party of the working people. If you look actually at who voted for Trump, he like landslide working people. Right. I mean, he had the Iron Worker Association, like multiple unions, like all these people all were like not just voting like their ranks, but they were literally supporting him publicly. They were going to his speeches, like all this kind of stuff. And so it's an interesting question of like, did Zuck, Elon, Joe Rogan, like they were all Democrats. Now they're all supporting Trump. Did they change, or are the parties moving? So what we like our previous construct of like what a Republican, what a Democrat is actually different now.
Yes.
Because you couldn't imagine like I don't know if you guys saw this one clip. There was like a construction worker in New York City, and a reporter walks up and is like what do you think about what do you think about Trump? Do you think he's going to win or something? And he's like, I mean like classic, New York City construction worker. Yeah, it's his time now, right? And they're like, what's your message to Joe Biden? And he's like, fuck you, right? And he just walks off, right? And you're just like, wait, what? Like, that's not how it's supposed to be, right? Like, it just like completely breaks your framework of it. And so I think those parties moving is more of the like, people actually have stayed pretty similar. Like, they believe a lot of the same things. They just feel like the parties now better suit what they view of the world more so than
Yeah.
their views changed, which is crazy, right? Like, if you told us that 10 years ago, we'd be like, what do you mean the tech, like Democrat leaning leadership is all going to be at the inauguration of Donald Trump? You'd be like, what?
Yeah, you said that like even 2 years ago. You'd be like, no way, right? Well, it's funny too. We talked about this a lot too. Is like the Democratic Party is in a way become the more conservative party, right? It's all about like following the rules. You don't say this, say that. Like in a way, it's actually a more conservative viewpoint. To your point, it kind of has like
I always think
swapped
about
out.
politics. I think can be explained a lot by parents and children. So if you think about the way the Democrat Party has been operating for the last couple of years, is like they're the parent. Don't do this, don't do that, don't do this, don't do that. Go to your room, not go to this occupation. Like it's very directive. It's very kind of paternalistic. It's very much like these rules that you're kind of talking about. And then like the Republican Party is kind of like teenagers that are like, yeah, I'm gonna do that, but like, dude, let's go get drunk too, right? Like let's have fun, like like, hey, what's possible, right? Like, how
Let's party
fast
with
can
Kid Rock.
well, like a good example is like, how fast can the car go? Like, you're not supposed to be speeding, but like, first time driving the car without your parents, let's see what this car can do, right? And so if you think like we're recording this on a day where there's a company in California called Boom Supersonic, and they literally just took the first privately built civilian jet, supersonic, like faster than the speed of sound. And so you say to yourself, like, that is very much like the teenager who like, what's possible, right? Type mentality versus the like, don't do this, don't do that, and maybe the best place to like where it shows up is I said, I think the week after it happened, I do not think the Baltimore Bridge will get rebuilt.
Why?
We're already like a year and a half or 2 years in. They haven't made any progress. But when they're going to say, okay, we're going to need to build the bridge. And the first thing they're going to say is, well, what is going to be the environmental impact? And then somebody's going to say, hey, we need to study the sound because the jackhammers underneath the ground, underneath the water, those might hurt the dolphins' ears, right? And then somebody's going to say, like that is the mentality is you have to appeal to everybody. And so the environmentalists will hold it hostage. Then this group will hold it
Doge
hostage.
to the rescue, or what?
Again, maybe with the administration change, maybe that is different. But it's just like that. I think was the longest, like the longest over water bridge in America was that Baltimore Bridge. So you're not just talking about like, hey, let's go build a bridge. You're also talking about like, let's build this like crazy bridge compared to everything else we have. So it's just the odds are it won't get rebuilt. Which you take like one of the most important ports in America, and like how do people get across? And you completely just say like, screw, we're not going to rebuild it, which is crazy, right? So
Yeah.
so you have stuff like that. Then you go and you look at in LA, like already, I mean, how eye-opening was it to have Trump and Karen Bass sitting next to each other, and she's like, we're trying our best. And then he's like, well, that guy over there told me you said 18 months. That's not acceptable. She's like, they can go tomorrow. And he's like, no, they're not letting them up. Like, it was just this meeting of like policy versus reality. And so it was like the parents saying it's dangerous. Like literally, she was like, there's hazardous materials. And I think he said at one point, he's like, what's the definition of hazardous materials? Like, what are the materials? Which is like a very teenager thing to,
Right.
like,
Question everything.
like, be like,
kind of
oh yeah,
obnoxious.
well, define hazardous, right? And so it's like this whole like political thing is really just like parents and teenagers kind of going back and forth. And it used to be the reverse. Like the whole idea of conservative party
Yeah.
was the parents were on the other side. So it's fascinating because if you pull it back into like investing, you now can almost go through different jurisdictions and realize that a lot of the like destructive policies came out of like very paternalistic regions. And sometimes the leaders might not even agreed with it. They just had people threatening their business.
Yeah, no, it's a great point. It's a great point. I mean, I remember I was in during COVID, I was in LA, and I mean, at one point they stopped outdoor dining. Like, give me a break. You're in LA, it's 80 degrees outside, and you're going to stop these business owners from making a living. To your point, because of these maybe more paternalistic.
But it also, if you go and you look at the people in those areas, it's a very big generalization. One of the things I joke about all the time is in the building I live in, New York, after Trump won. So Trump is the president. He's going to be the president. Wins in a landslide, general population, the whole thing. A woman got into the elevator with me, and she's probably older. I don't know how. I don't want to guess. But she's older, and she gets in the elevator, and she commented on the flag pin that I wear. And at some point in a elevator ride that's not that long, she literally looks around the elevator. It's just me and her in the elevator. She looks around, and then she like whispers. She goes, "Did you vote for Trump?" And I'm like, lady. I'm like, what? And I didn't even answer. And she goes, she says something like, I did, but you can't say that in New York City or something. And I was just like this is, we're talking about, majority of the country voted for them. He's going to be the president. We're in an elevator, and she still was like so conditioned to do this. And so if you take that and you extrapolate it out, like in LA, how many of my friends are just like, oh, if the government says it, like, that's just what we do. Whereas if you go to certain areas, it's kind of like again, generalization, but in Texas,
Oh yeah,
they're like,
they're the only
the
Republic.
government said something, we gonna do the opposite, boys.
But I
Right?
would think actually, I think overall, now thinking about it, I think the majority of Americans don't want to be told what to do. And
Correct.
maybe that's one of the reasons why, a major reason why decisively Trump won, is because I think the average American doesn't want to be told they have to do anything. I think that's I think if you told Americans they had to go in again, like if we had another COVID type situation, they just wouldn't do it. I'd say maybe 70-80% of people would just be like, aha, yeah, good luck with that.
Part of being an American is doing what you want is free will. And I think going back to your point, it's like people didn't pay attention to politics until it started affecting them. Still, as far as like their pocketbook.
And nobody cared about politics.
And that was the number one
Yeah.
reason I think, Trump won is for economical reasons.
Yeah. Well, if you go back to pretty much every problem that people voted on, right? Like, it was the government telling them not to do something. You cannot speak freely. People, I got a problem with that. You cannot transact. You cannot store your wealth in a bank. Like all these issues was people stopping Americans from doing what they want. And so Trump kind of showed up and was like, I'm the cool parent who's just going to let the kids party in the basement. Don't kill anybody. Nobody leave the house drunk, right? Go. And there's a lot of people who are like, that sounds awesome. And, you got to be careful because when you have somebody come into the White House who he measures the success of the economy through the stock market. He now, from what I've heard, is starting to pay more attention to the Bitcoin price. So those things should go up if he is like kind of, it's like you move what you measure, right? If he's
Right.
paying attention to these things, he's going to do things that affect them to go up. He wants that to be his legacy. So that should be good for investors. But it comes with the willingness to really throw some volatile, uncertain situations at the market. And so I don't think there's a lot of people who would have looked at Trump and said, this guy who is America first, very kind of anti China, is going to essentially embrace the launch of the Chinese AI model DeepSeek. That's what he did last night. He's literally on stage and he says, this should be a wake up call for the industry. It's a great model. I think this is really going to push forward AI innovation. And he was not like railing against China. He was not, taking the position of they're violating export, laws, or they're stealing our IP. There was none of that. It was very much, hey, AI is going to be this global game. We should improve our game, but also this is actually going to better the American experience because they now have access to better technology. So it's like, you get into these kind of like complex things where I think a lot of people looked at it and they're like, I thought Trump would just be like, came out of China,
Nationalistic. Yeah.
anti-China.
Yeah, I think it's a good point because I think this protectionism is not like a real thing. Yeah, and I think you're right. I think it's actually in a good way. I think it's surprising. Like he didn't announce tariffs on his first day in office, and he does want to work and negotiate with everybody because let's face it, like we want the global economy to work. We want to work with China, and I think that's a really good point. It's not this nationalistic protectionism that everybody kind of was fearing, and I think that's probably one of the better things that we've seen so far.
Yeah, look, there's a lot of people that I think voted for him that were like, hey, the most extreme views that he has, I'm not down with, but he's better than the other option. And there's one or two things that I like that he does, which, if you really think about candidates throughout history, I don't think I can think of a candidate where they showed up and everyone was like, I'm 100% on board. Right. If you think on the other side, like Obama's a good example, right? Obama, I think, showed up. He was this great orator. Perfect time in history. He had a very like kind of unifying message, very much like we're going to believe in change, like all these things that resonated with people. And then it was like, okay, his most extreme views, actually, a lot of people were like, that might be a little too far. But the bulk of stuff I can kind of get on board with. And so I just think that's how politics works, is like there's no perfect candidate, and people are really just trying to pick out of like, hey, these two candidates, which is the one that is either one, best for my wallet, which nobody likes to admit, but like that is what most people are deciding on, or two is which is the one that I can like stand the most out of these two. And I think most people who look at politics think it's the opposite. They think it's like, rah rah, this is the best candidate in the world. It's just not reality.
Well, I think, for Ryan, the most important thing was the fact that the Gulf of Mexico will now be the Gulf of America.
Hey, hope you're enjoying the most recent episode of Payne Points of Wealth. Everything you hear on this podcast, along with some due diligence of your own, can help you get ahead financially, literally at any stage of your journey. But if you want a more hands-on approach and you saved over $1 million, Bob, Chris, and I will put together for you our total financial master plan, and we'll do that with no obligation or cost. It's a full holistic review. We literally look at everything. We go as far as building you your own personalized financial portal. We'll give you a bird's eye view of your entire financial life, and we'll hone in on every financial issue you need to address today. Whether it's an income plan for retirement, how do you take Social Security? How do you draw from your portfolio? How do you factor in inflation? We'll build a dynamic income plan for you. We'll look at diversification. Has your portfolio been up and down with the markets, extremely volatile, or have you been sitting in cash? Paralysis by analysis. You can't figure out what to do. We'll put together a full investment game plan, tie it to your goals, show you how to grow your wealth, but most importantly, protect it over the rest of your life. And we'll look at fees and taxes. Wall Street loves to sell you high cost, tax inefficient products. Whether it's an annuity, mutual fund, brokerage product, we'll do a deep dive of every investment you own. We'll show you how to reduce the cost, optimize your portfolio for taxes. It's not what you make, it's what you take. You'll get our full tax playbook. If you want this full holistic review and you saved over $1 million, simply go to www.paynecm.com/financial plan or click the link below to see if you qualify for a free financial review.
One of the places that I went that I found fascinating was Nigeria. And I went there in 2017, I think it was. And the reason why I found it fascinating is there's 250 million Nigerians, and their population is growing at a pace where they believe there'll be more Nigerians in the world than Americans by 2050. So you say to yourself, like, okay, this is obviously a very young population. I was surprised by the internet and mobile penetration. Like everyone had at least one cell phone. And so you're just like, okay, like they're hyper connected to us, right?
Yeah.
And so you're gonna see like an evening out of a lot of things, not everything, but a lot of things. And what was interesting about that trip is I saw a lot of trends that are now showing up in the US actually there first.
Like what?
So a good example is they're very into soccer or what they call football, and they have these like betting houses. And so you go to these betting houses and you can like bet on the games. They have a bunch of TVs, almost like a sports book here in America. But one of the things I saw there was there was all the games were on commercial, and then on the far right there was a TV, and it looked kind of grainy. Like I was like where is this? So I walked over and I asked one of the guys, and it was a simulated video game. So when you play a video game, you know how like you and I could play against each other, or we could just like simulate the game, and neither one of us is playing, but like the computer is playing the computer, and you're just watching. And these guys were betting on it. And so my mind immediately as an American, I'm like, how's the game rigged? Right? Like who's got an edge here? Like, somebody somewhere, right? Like they're looking at the odds. They're somehow like whatever, immediate distrust. But there was a room full of Nigerian men who were all betting on this thing. And so I said to myself, I was like, oh my God, they're actually just looking for like entertainment. They're using money as like an entertainment thing.
Yeah.
Right. And so at the time I walked away and I was like, oh, that's kind of like a casino. But actually, if you think about like the meme coins and a bunch of stuff that's now happening in American society, it's very similar. Right. What are people doing? They're like basically betting on like up or down. Yeah. Right. Like they're betting on volatility. And so there's 100%. A lot of these like types of things that I think you can look around the world and see. And then they start to show up in weird ways back in the more developed nations.
Well, that's kind of interesting because I know you are very into crypto. What are your thoughts on crypto? I know you're pro crypto. I guess why you're pro crypto, and where do you see it fitting in, especially with the Trump administration? To your point, is it very pro crypto?
Hopefully, I don't get murdered in this room.
No,
you guys are all smarter than me on almost everything else, maybe other than Bitcoin.
Maybe Bob, but the rest of us.
I have a very warped view of the traditional finance maybe perspective. And that context is important because it leads to kind of a different way of looking at assets, markets, etc. I am not a believer in things that are kind of seen as like sacred in traditional finance. So things like efficient market. I don't believe there's something like intrinsic value, things like that. And so we can get into that stuff if you guys want, but just like maybe I'll put it as a bucket of like, I have a very different perspective. And so by looking at financial markets through that different lens, it starts to maybe some things that traditional investors would say, hey, this is really important. I would say, I don't think that's that important. And then things where they're like, that's really risky. I would look at like, that's not that risky. And so a great place where this signs up is like when you are investing, you always want like a reference point. You want some sort of benchmark. Am I doing well? Am I not doing well? What's my hurdle rate? What is kind of that benchmark that I'm looking at? For me, I think the only benchmark that matters is Bitcoin. I know that that's blasphemous in traditional finance, and they'll look at S&P or other things, right? But I look at it as the benchmark, like a true benchmark is what is the thing that is going to consistently perform best and be responsive to the world around it. So if you look at like sensitivity to money supply changes in the world, Bitcoin is the most sensitive asset. So if money supply is expanding, Bitcoin goes up. If money supply is contracting, it goes down, which is what the stock market does too, but it is just more sensitive. So it's like hypersensitivity to a lot of these inputs, interest rates, etc. And so it gives you kind of like the best macro lens. So let's say that there's a very well-known macro fund. I was talking to the CIO recently, and he said when they come into the office every day, they check global liquidity, they check the Bitcoin price, and then they go check the rest of the metrics. And so that's interesting. And he's not like a Bitcoin guy, right? So I was like, why Bitcoin? And he came back to this point. It's like, it's the most sensitive thing. So we get a good sense of bullish, bearish, what are the economic conditions, et cetera, by that one price point. So it does very well. It's been compounding at like 60% a year for a decade. And so the starting point is like, if you can't beat it, you got to buy it. Right. Which again, there's a lot of people who say like that may not be good enough for their framework. But for me is if you can't beat the benchmark, then you should just buy the benchmark, which is the equivalent of like buy the S&P because no one can beat the S&P. Right. It's just now I've moved the reference point from a group of 500 largest US stocks to I've moved it to this Bitcoin thing. The second thing is the US experience is very human driven, where we have hours of operations. I think that we will look back on the hours of operations as a form of market manipulation and say, why did we prevent people from being able to access the market? So if you think about, like, go back to Iran launched like 300 missiles at Israel, and the Bitcoin price dropped significantly and then went up once everything was okay. And so it was like very responsive to this geopolitical event. The stock market was closed, right? When Trump is getting sworn in, he's saying things that are affecting these companies, but nobody can go and actually make changes to their portfolio. And so it's this weird world of like so much of the legacy system is built around this. So what do people say? Like, oh, when the market opens tomorrow, like XYZ is going to happen.
But I think you're also talking about two different things, right? That's a trading mentality versus an investing mentality, right? Because if you're an investor, you don't really care about what Trump says on a daily basis. You don't really care about one geopolitical event, right? So I think that, to me, it sounds like these are two different, I guess, philosophies, right? What have you? Because like to me, that would be a trader mentality to worry about those things.
I look at it as everyone has a trader mentality when you put on a position or you take off a position. The investment mentality is what you do in between those two decisions. So, like a buy or a sell decision is a trader mentality. A hold decision is the investor mentality. So, like when Buffett decides that he is going to sell one stock and he's going to reallocate that capital somewhere else, he's in a trader's mentality. He's trading one asset for another asset. And then he becomes an investor because he's not willing to sell.
No, I agree with you, but I think that's probably more in a macro view, right? He probably sees it like bigger picture, like Apple is, at this point the multiple is here. I don't even own specific day, but the broad strokes are it's probably a good time to take 60% of my position off the table, as opposed to trading in and out of it over. It just seems like it's. I guess the time frame on that still feels like it's you're moving a big battleship versus.
So a good counter to that is Bitcoin has the longest term holders, that it has more long-term holders than the stock market. Because if you look at Bitcoin, one out of every two Bitcoin has not moved in the last 2 years, even though there's been hyper volatility, right? It went from 69,000 to 16, all the way back up over 100,000. And still more than half of the people holding the asset did not sell. And then if you go and you look at Bitcoin over time and you go back 5, 7 years, whatever, there's this very long-term holder base that's built into it. But the beauty is that what you want to be able to do is you want to offer everyone opportunity at all times to engage, but also with the right asset, they're incentivized to not sell it. Right? Because the reason why people don't sell assets has nothing to do with the psychology other than they believe it's going to be worth more in the future. Like Buffett is buying a business because he sees it compounding. So he's like, the longer I hold this, the more value it's going to drive to me, right?
Right.
And so the like meme in Bitcoin is if you buy the Bitcoin and you wait, Bitcoin will be worth more in the future because there's a limited supply, demand will increase, blah, blah, whatever. So actually it's the like future promise of return that creates these like long-term horizons, which is very different than I think what you're kind of calling like trader mentality of like, if you're like, I don't know, buying on Monday GameStop and then you're like selling on Wednesday. Yeah. I don't know if anyone's ever made, a good fortune doing that. So it's more of what you want to do is be able to get these assets. And the reason why I say it's optimized for humans is like the next thing that comes is these are all going to be machines and software doing this. So like what happens when your AI agent is engaging with another AI agent and then they're investing the capital on your behalf? Right? Like that's the world that we're entering into now, is where money gets transmitted by software between them, or machines get transmitted money between them. But then those machines are going to invest your money. They're going to do certain things with it. They're going to put it where you tell it to put it. And so they can hold it, but it's more likely that we're going to move into a world where every market is available 24/7. And then you can actually stream this stuff.
But why wouldn't it just be pegged to the dollar per se, as opposed to some other completely different, I guess, currency that's not tethered to a.
Well, again, it goes back to a different worldview. I think
Right.
the dollar's the riskiest thing you have in your portfolio. Lost 20, it's guaranteed to lose money. Right. So if I tell you, hey, I'm going to put your economic value in an asset that's guaranteed to lose value, you'd be like, well, don't do that. Right.
Well,
So
yeah, but that's not what it's designed for, right? That's the stability is what obviously you invest your money to beat out inflation over time, because sitting in cash isn't going to do that. But the whole idea of a dollar is the stability, so that when you're not
But I think that is the Bitcoiner argument, is the dollar's not stable. It's not serving its purpose. It lost 25% of its purchasing power in the last 4 years, right? So
Versus
there's,
what though?
well, just your purchasing power against goods and services, right? So not even other investments. Against Bitcoin, it's crashed like 80% in the last 4 years, right? So if you just look at it in terms of, I used to be able to take $1 and go to the store and buy X. Now I take
Right.
$1 and I try to buy the same thing. I can only get 75% of that, right? Because I lost 25% purchasing power. And so it comes back to this weird world where we're so conditioned of dollars and treasuries are safe. But if you go look at like TLT, it's 20-year treasuries, it's down like 35% in the last 5 years. So actually what ends up happening is, and that's on a nominal basis. We're not even talking real, type returns. So then you say to yourself, what return do you get? So there's this guy, Cullen Roche, who a traditional investor, he wrote this book that's coming out, and he did a study the last 125 years. And over the last 125 years, U.S. stocks returns like 9.7% or something nominal.
Right.
But when you account for inflation, the real return's like 6.6%, right? So like it's slightly under 7.
Yeah.
And his point is like right there out of the gate, inflation is eating away 1/3 of the return that people think they're getting. So he's like, that's the most expensive fee, is actually the inflation. So you're still getting 7%, right? Which like isn't horrible.
That's probably amazing if you like average investors on like 2 or 3%.
So
over the last like 50 years, right?
So then you look at it and you say, okay, well, what if people want a higher return? Where do they go? They go to things like real estate, right? What they're trying to basically do is say, hey, I know this inflation thing's going to happen. I want to be on the side of the trade where when inflation occurs, I benefit. So if you're in stocks, you benefit, right, to a degree. Real estate, you benefit. Gold, you benefit, right? Like being an investor, pretty much versus a saver, you'll benefit from inflation.
Right.
But then you say to yourself, okay, well, what is the thing that's going to benefit the most? And I think this is where you see the Paul Tudor Jones, Stanley Druckenmiller, et cetera, say like, hey, this Bitcoin thing is going to be the most sensitive. It has the most asymmetry. So I'm not going to put 100% of my money in it. I don't have 100% of my money in Bitcoin.
Yeah.
At one point, I was young, dumb. I had a lot of money, but you start to think of it as like, it is a tool for a portfolio that serves a purpose, right? But then you also look at it as like who are you as a person? What are your needs? If you're, I don't know, 85 years old and you need income, buying Bitcoin's not going to help you, right? But maybe going and buying one of the derivative ETFs that has a really high yield, maybe that thing serves you best. And so you're like, those are like two completely different things. But
Right.
if you're talking to a 21-year-old kid who's like, what asset can I buy that has a really high, annual compounding rate that if I hold it for 30 years, it's probably going to do pretty well. Whole different conversation than the person who's like, I need income because Social Security is not going to pay me, right? I need to be able to pay my bills.
Well, since you're good friends with Mark Zuckerberg, at what point did you tell him to sell all his Facebook and put it into Bitcoin?
Here's the funniest thing probably is Warren Buffett. I always give my friends who are really big Buffett fans, Buffett has created an enormous amount of value for a lot of people. But the one thing that he's done that actually destroyed immense amount of value is he convinced Bill Gates to sell his Microsoft stock and then do the philanthropic work. And so I saw a stat that if Gates had never sold, he'd be the world's first trillionaire,
That's
only
interesting.
air quotes, right? Worth like 200 billion or something, which is still obviously incredible. But it's something like he would have 5 times more money.
Yeah.
And so Steve Ballmer, I think now is richer than Bill Gates, even though Steve Ballmer didn't found Microsoft.
Yeah, and it was like the worst CEO ever, by the way. That's what it did the worst.
You said that, not me.
Never
right?
let the sales guy run the company. We all know that.
But I think it goes
Yeah,
back
yeah.
to this idea of like this, like you're incentivized to hold great assets for as long as possible, right? It's like Ballmer's a perfect example. It's like he basically never sold the Microsoft stock. Gates had way more stock, but was selling along the way, and so at some point they crossed, and now Ballmer is richer.
Now that we have Trump in office, how does that change your thought on Bitcoin and cryptocurrency? Is I guess both short term and in the long run.
I think that Donald Trump is good for all investment assets because he measures his legacy on did assets go up or down, right? He did that in the first time as president. He's already talked about the stock market. You could even argue he was talking down the market, so he got like a better entry price coming in as president in the weeks leading up to him coming in, right? He was saying some things, the market was going down. And I was like, this guy manipulating the market down.
I'll take credit for it, but yeah,
100%. I mean, Bitcoin hit 100K. He took credit for that. He
yeah.
literally said, Bitcoiners should say thank you or something, right? Whatever. So that's going to happen, and I think that him being there is kind of a tailwind. The big question with Bitcoin is the strategic reserve. Like if the U.S. government goes and buys Bitcoin, obviously that'll be a huge tailwind. There are other countries that are already buying Bitcoin. Some of them are public, some of them aren't. But I think that will kind of give cover fire. A lot of people will come out and start talking about that, and so that's kind of the last big pool of capital to come in. But the more interesting thing to me is if there's one policy he's going after that I think is like a tailwind, Bitcoin being a big winner, but I think a lot of kind of tech and innovation, it's just this general like deregulation approach that he's taking, where, if you go and you look at, I don't know, like the FTC, right? And how many M&A stuff did they block and like all this stuff that they were doing, just showing up and just being like, hey, again, like people want to talk freely, people want to transact freely, like two consenting parties can come together and do what they want to do. That feels like that's like a big tailwind, and that hasn't been, kind of the approach previously. And then you always got to throw in the wild card tweet. Like the guy fires them off sometimes, and like sometimes they're not good, right? Sometimes he says stuff and stocks tank, and then every once in a while they benefit. And so I actually have a friend who he did this like huge study, and he was like, if we could predict what the next Trump company that he's going to tweet about, then we could do this. And he was using the John Deere example. So John Deere said they're going to move one of their plants to like Mexico, and he was on the campaign trail, and he was like, day one, I'm going to tariff them. Like they're not going to move that plant. Of course, stock goes down, right? So a lot of that's like short-term noise stuff, but I do think that you're introducing more kind of volatility into the market in a way that maybe we haven't had to deal with previously. And so if you have a president that's going to do that stuff, maybe the only other policy that he could do that would have a massive impact on investment portfolios is this removal of federal income tax, which I do not think is more than a 50% likelihood.
I agree with the deficit. There's no way.
But I do think that it is a higher percentage than people are assigning. So let's say most people think it's like a 1% chance. Maybe I'm at like 7, right? Or 10 or something, right? But it's still like very small percentage chance. But what I do think is interesting is rather than remove it, could he drop it? Could he cut it in half, right? Maybe that's like a better question is if, depending on who you are, what your tax rates, whatever, let's just say use 37.5%. Could he get it to 20? Like that would be pretty shocking, I think, to a lot of people. And imagine if every American had 20% of their income staying in their pocket rather than going to the government, and he was able to replace it or supplement it with tariffs or whatever. Like, okay, well, most of that money, I would think, for the people who are paying 37.5%, they probably have investments. That is probably money getting invested. There are people who definitely will do it, right? There's definitely people who will blow it. But I think that just like who the savings would get. Remember, like the bottom, I think it's 47% of Americans don't pay taxes. Right. So like immediately they're not going to have any tax savings because they already don't pay any tax. So you're looking at like a certain subset of the population. Will they spend more? Absolutely. But also like that feeds back into the stock prices anyways. Right. Because like now you're driving more revenue.
And these are all like general either economy or general stock market positives, which I think has been kind of the consensus with Trump coming in is that there's pro-business and deregulation policies, which will be beneficial. But then there's this idea of the Trump trade and like specifically crypto being part of that. But what I hear from you is you think he's good for all assets, crypto being one of those, maybe not necessarily more so than another asset, if that's what I'm hearing.
just think of investing in general. It's very similar to like the money supply, right? Everything goes up, everything goes down.
Mm-hmm.
And crypto is the most asymmetric of them all. And so why is Bitcoin interesting? Like one of the things I always tell people is if I go talk to, I'm weird in that I have like 1 foot in the traditional world, 1 foot in the crypto world.
That's why you're talking crypto, but you're wearing the suit and tie.
Yeah, exactly.
You get it. Yeah. You look like
probably the only guy
bro.
in the world that does that, right?
Yeah, exactly.
But if I go and I talk to people on Wall Street, they will tell me that Bitcoin is the riskiest thing in their portfolio. If I go talk to like the crypto people who work in our office, they're like, you own Bitcoin? Like that's like the boomer coin. Like I own whatever. And I'll actually tell you a crazy story. This is a true story of a guy who works in our office. He, I don't know, he's in his 20s. And he came to me and he said he was very down one day. And I said, what's going on? And long story short is he had put a lot of money into a coin called Ski Mask Dog. And it fell like
that's my whole net worth.
It fell like 95%. He was young guy, put money in, whatever. And I was just like, dummy, right? Like, come on, what are you doing?
Yeah.
So this goes on for like 2-3 weeks. And then one day he comes in the office and he's ecstatic. I never seen this kid so happy before. He's a happy guy. I never seen this happy before. And I said, what happened? He goes, dude, you'll never believe it. I never sold the coins. It came back. I'm now up. And I think he'd put like, I don't know, 50 grand in. Now he's up like another 70K.
He's real money.
So it's from like 50 into like 120 grand. And he's after going down 99%. This all happened in like 3 weeks. So I'm like, sell. Sell. Ski mask dog is not the next Berkshire. Sell. Right. So he sells. And this token, somehow a politician bought it. It runs up so high that he would have had $11 million.
Oh my God.
And so now he's depressed again because he could have had $11 million.
I think that's also
Right? It's insane.
Yeah. I think maybe a little bit of this too, though. And I think this with Bitcoin, and this comes to maybe an age thing. I started my career during the .com bubble bursting. So I came in when everything was bad, not when things were good. And only if you're like Generation X and above, you were really working during the great financial crisis. That's when we started our firm. So I wonder, though, there's a huge percentage of the population in this country that doesn't really know what a financial crisis really looks like. I mean, arguably the pandemic lasted very little.
They're not going to ever experience it.
I disagree with that. I actually think, I mean, the real estate bubble wasn't that long ago. And I remember when people were making money hand over fist.
But my general sense, and again, it goes back to kind of this warped view I have of the financial world, is any recession longer than 18 months has been outlawed. Not because people won't get overexcited, not because people won't be stupid and human greed, and all that stuff is still intact. History is undefeated. We now have a tool that the central bank can't help but use. And so you saw it during the pandemic, the quantitative easing. Again, there will be crashes and stuff, but I measure it by 18 months because they can let it happen for 6 months. Maybe they can stretch it to 12. But if you think since the global financial crisis, we have not had any sort of market downturn for 15 years, that has been really more than 6 months, but just call it 18 months. And so moving forward, anything that happens, and like COVID was the perfect test. There's nothing more destructive to the economy than literally locking everyone in their homes and saying you're not allowed to spend money.
Yeah, but that was balanced with fiscal spending. That if we try to do that again, that just like destroys the dollar, right? You can only do that.
Well, they never stopped.
Oh, wait a minute. You're saying there'll never be another 2008? Is that what you believe?
I just think that there will be these situations that come up. So like 2008 can happen again, but what I believe is that they will step in and they won't let it be prolonged. So like the thing with 08 is you can measure a financial crisis by two things. One is the severity of the drop, but also the duration. And if you actually go back and you look, like gold went down, if I remember correctly, in 2008, went down for like 6 months, right? And then the entire crisis, most people would say, was like 3 to maybe 4 years. And I don't think we actually came back to the same stock level until like 2012 or 2013. So if you look at, it's not just the severity of the drop, which obviously was painful, but it's also that duration. If you look today, COVID was actually a pretty significant drop, like severity-wise. But it was
actually comparatively really wasn't, though.
No, not at all. Not at all. And if the government could prevent this, because we had a 50%, 60% decline in 2000. Why'd they let 2008 happen?
Well, they didn't have the playbook, right? They really created the playbook in 2008.
Well, we had the same playbook in 1930, 1929. So, I mean, the point is, markets are unpredictable. And I think what you're saying right now, and I'm glad you believe it, but a long time ago, a really smarter person, much smarter than me, said, four most dangerous words is it's different this time, right? It's different this time. It's never different. And so I think that, when you look at the 2000 decline, you look at the best performing index in the world since 2008. It's been what?
S&P 500.
Yeah. Well, after 2000, it had a 0% return for 10 years. 0%. I mean, you want to talk about duration. How about making no money for 10 years? Now, I think that if you diversified properly, you made 6-7% a year, which is awesome because you double your money every, 10 years. But having managed my own money and people's money for 50 years, you don't know how brutal it is to someone to be down for 10 years, to make no money. You want to see people leave investments in droves? That'll happen again. Now, you're smart enough to know and you know yourself. So you can handle that type of negative duration. But the average investor, especially ones who have never even seen what we've seen in 2000 to 2010, they don't stand a chance. The sheep are going to be sheared, and it's going to be ugly.
But I think that I actually think that we're saying the same thing in the sense that the pain that you saw people experience, if they could have, the central bank and the politicians would have prevented that. Like they would have stepped in and solved the problem. And what we saw during COVID was we got away from this playbook of, let's just call it the quantitative easing playbook, where, for those kind of watching, the government is literally creating money and depositing it in the account of these kind of prime dealers, right? So they're just out of thin air. They go on their computer, they create money, they put it in there, and they flush the system with more capital. We had never done that before, right? The first time that we did that was in 2008. And in 2020, the argument was not, hey, this is a good economic decision, whether it was fiscal or monetary. It was, people are suffering. We have to give them help. We have to get them checks. We have to do all this
That was
stuff,
also
right?
an engineered shutdown of the economy, right? That's different. That was,
Yeah.
yeah,
You're talking about
that's
financial engineering. And, they make it up as they go along. If you go back to the great financial crisis,
That we agree on.
people didn't know what they were doing. And you know what? We don't have smarter people now. It's like markets are cyclical, economies are cyclical. You can't repeal the business cycle, and a government, certainly our government, cannot financially engineer it. So I think it's dangerous, to have that belief system. And I think you guys are spot on. I think the current generation of investors have that thought process. And, I don't think anyone understands the pain of being in a bear market when you're on the wrong side of that in an asset class like Bitcoin, right? Which I call a greater fool investment, because why did I buy it? Because it goes up. It's a hedge investment, right? I mean, if I'm a hedge fund manager, I'm huge in Bitcoin because it's going up. What's my rationale? Well, it's going up. My investors want something that goes up. Now, I'm not saying it should be part of somebody's portfolio, but, that can go down 90% and still be viable, all right? Just like Amazon stock did after it went public. It went down 90%. So I think that the success we've had in investing now, I think we ought to be talking about more caution than throwing caution to the wind.
Can I tell you something that I'm gonna only say because you're remotely and you can't throw something at me? Which is when I wrote this piece maybe 2 years ago, and when I wrote it, the reason why I say you might throw something at me is because pretty much every person I knew in traditional finance did try to throw something at me. But I really believe this, which is people in traditional finance, they have had over the last 25 years 3 major like bear market crash drawdowns, etc. 2000, 2008, 2020. And some people may say that there was like was it 2018 when they tried to raise interest rates? Like there was some little stuff along the way, but there was like three major kind of crashes. My point was that the young people in crypto have actually lived through more market crashes than the traditional financial people, because Bitcoin has gone down 80% or more 4 times since many of them started to buy it. And so what is interesting about it is they saw market crashes that are different, right? It still went down. Right? Something goes up a couple 100%, draws down 80%, and then they had to live through kind of a year, 2 years, whatever, going sideways. So it's the same like market structure you're talking about with the 2000 crash. It just wasn't on an accelerated timeline of kind of up for 2 years, down 80%, sideways recovery. And my point in writing the piece was I actually have hope for the younger investors who have gone through that, because they've started to learn about market cycles. It's like getting like a condensed education, right? Where all of a sudden now they're like, hey, if I've lived through this 3 times, maybe I shouldn't take leverage out when, Bitcoin is skyrocketing, or, some of these things that you probably are constantly telling your clients, don't be stupid.
So the $4 billion that just went into MicroStrategy double leverage ETF. It's because people have learned their lesson. But
the way that I say it is, people should be allowed to do what they want with their money.
About that, Paul.
I'm not going to do that, but people can do what they want with their money.
But I also think too, it's also size of the money, right? Young generation doesn't have that much money that they're speculating with. It's different when you've got a couple $1 million or millions of dollars in real estate, and people just got wiped out like that.
100%.
So I think
the other
that's
thing
a
is
little bit
the
different
liquidity, right?
experience.
That's another part of the
Yeah.
2008 crisis. I think that a lot of people kind of wash under the table, except for like maybe the most sophisticated finance people, is you're dealing with an asset with leverage and you're dealing with an illiquid asset. So it's not like we're talking about leveraged stock portfolios that, oh, it's going down 20%, I can sell, right? You have an illiquid asset. So moving it was nearly impossible. And then you have it with leverage. And so when you put those two things together in a market crash, it's like, the triple threat, right? Like you're screwed. And so I do think that there's this really interesting element of if you were to do like the equivalent of like a zero-based budget, and you just say, all right, forget 60-40, forget all this stuff. Like, what is the portfolio that you should design moving forward? The again, I'm glad Bob is remote. The thing that I always go back to is this idea that if you introduce Bitcoin to a portfolio, the Sharpe ratio goes up. It actually de-risks the portfolio, which is like a fascinating thing because the volatility, because of the drivers of it, et cetera, are different than what drives like the S&P, for example. So you start to say, like, again, don't put 100% of your money. But when we first started talking to, kind of sophisticated institutional investors about this, we were like, just get off zero, and get off zero, maybe 0.5% for one group, maybe 1% for another group, whatever. But we're talking about a very small percentage that what you're really trying to do is you're trying to capture some asymmetry. So you can only put in a little bit. And then also, can you manipulate your Sharpe ratio to actually de-risk your portfolio? Like, I think that's much better accepted than I'm 22 years old. Let me go like buy ski mask dog, right? Like, I think that's like we're just like talking about sports
wrote
betting.
that one. No, Chris, write that one down.
I actually think the whole point of this podcast is we should all go buy ski masks.
I think
That's what I've taken from
By the
this.
way, of course, like we'll get done with this, and there'll be somebody who'd be like, "Oh, they were talking about ski mask dog."
I just hope that article you wrote isn't reminiscent of an article was written in August of 1929 entitled "Everybody Ought to Be Rich." John Raskow recommended that everyone get 100% invested in the stock market on leverage. Make 15% a year. Took those people 40 years to break even.
I think that I published this. I'll send it to you, but I think I published it at the end of 2021 because some of the smarter investors I knew were all right when the Fed started to talk about raising interest rates. They were talking about like this is the top of the market, and they were like, oh, these young kids are all going to get wiped out. They blah blah whatever. And my point was, there will definitely be people who get wiped out, but it's the people in the crypto world having gone through these cycles before, plus. It's this weird thing. Man, you guys are really just pulling all the things that I shouldn't say to you.
Then I'll go for it. This is great.
Bitcoin and Berkshire are more similar than you would think. Which
I
see your head. Yeah. All right. All right. So ready?
No, you're gonna hear it.
So here's my thought process. Older people have been convinced buy Berkshire and hold it forever, because they look at the compounding nature of Berkshire, the cash flows, the assets, Buffett's decision-making, all these things that go into it. Younger people have been convinced buy Bitcoin and hold it forever, because what they're looking at is the debasement of the dollar, the inflation, their drivers. So you have two groups of people who are saying, all I'm going to try to do is acquire as much of this asset as I can, and I'm never selling. So psychologically, they're aligned on like the Buffett's, buy a great asset, hold it forever. Then if you look at, I have this like transition of comparison of assets, which is Buffett and Berkshire is 90% good business, 10%, I call it a meme, but it's like the Buffett premium, right? Like Buffett gets some portion. I don't know if it's 5%, 10%, whatever, but there's like a Buffett bump to Berkshire because it's him. He is seen as the guy, right?
Sure.
If you then take a step still in the stock market to the right, you then get Tesla. Tesla's like 50% business, 50% meme, because it's Elon. He's got this rabid fan base. People are going crazy, whatever. So like there's a business, and I think a lot of people are excited about the business and what they're building, all this stuff. But there's still like a very big portion of that market cap that is just like enthusiasm for Elon and what he's building and kind of the Elon premium.
It almost makes it riper to get hit really hard.
Okay, so hold on. Agreed.
Yeah.
Go one more step. Then you have like DJT stock, which is like 1% business, 99% meme.
Doesn't this sound like a bubble to you?
Well, hold on, right? So then you have...
That's where Chris has all his money, by the way.
So,
DJT.
Well, then if you think about it, it's like $4 million of revenue. It's like a $7 billion company.
It's silly.
Obviously
It's
insane,
silly.
right?
Yeah.
But then like Trump launching the meme coin is just a natural end state, which is just like, why even have a business? Just like 100% meme. Just like launch the Trump coin.
It's kind of like I should just put .com at the end of my business, and it
100%.
will, skyrocket.
So if you pull that
Yeah.
back and go back to the Berkshire thing, what ends up happening is there's still some version of this like premium, this Buffett bump, this like whatever. It's not Trump meme coin or DJT stock or not even Tesla, right? It's like maybe 10%. If you then go and you look at Bitcoin, Bitcoin is similar, but for different reasons. It's the largest computer network in the world. If you took AWS, Google, and Azure and put them all together, it wouldn't even be 1% of the Bitcoin network. So it's this massive, infrastructure that's been built. It's got more computer infrastructure than Amazon has. And then you say to yourself, okay, but there's still some premium there that is the like Bitcoin meme. And I don't know, maybe it's 20%, maybe it's some number, but it's a very similar structure to Berkshire. It's just that Berkshire is backed by traditional assets with traditional cash flows. Bitcoin actually has the
That
most.
seems heartwarming to me, though.
Huh?
That's heartwarming to me. It's actually backed by real assets.
But here's the thing. But here's the thing is
what am I missing?
Bitcoin actually has more physical assets than Berkshire does, because Bitcoin is, remember, it's decentralized. But if you were to just create centralized control, right?
Are you talking about the actual like servers?
The data centers, the servers, the physical infrastructure that runs Bitcoin.
But generates nothing. That's the problem, right?
It does though, because every one of those mining businesses is like one of the subsidiaries of Berkshire. Berkshire consolidates their financials, right? Because they own all these different businesses. The Bitcoin network says we don't consolidate financials. Each mining business makes their own money.
But that's just them mining coins. It's not like serving a purpose in society. I think that's the difference.
But here's the thing is they're doing the single most important thing in society, which is it's the only asset that preserves economic value and beats inflation.
That's like for now, though, right? That's like
Wasn't inflation 8-9% in 2022 and Bitcoin was down 70%?
But you have to look at inflation is over years, right? And so Bitcoin is compounding at 60% year over year annually for the last 10 years.
As opposed to Berkshire Hathaway that owns companies that have been operating for 100 years that have real assets like buildings, equipment, sell products, generate cash flow, pay dividends, grow their market. I mean, it's one thing to have a bunch of computers that if Bitcoin goes under, what are those computers worth? As opposed to, and I always kid with Ryan, when the market goes down, we do a conference call with our clients. I said, boy, I hope the stock market goes to zero. And I calculate how many days it'll take based on the market being down 1,000 points that day or whatever. Because when it goes under, this way I can get Apple's jets and I can get Madison Square Garden, the actual building,
Yep.
I mean, if Bitcoin goes under, do I want a data farm? I mean, do I want a couple of computers? What am I going to do with these computers?
Yeah. Well, I think what it gets at is, I'm probably weird in the Bitcoin world that I think you actually want to own both, right? Like I'm not somebody who's like, oh, Berkshire has no value, right? I actually think that Berkshire has a ton of value, and there's a reason why they've been able to do what they do. But one of the things that I do find interesting, I'll have to find the chart, but if I remember correctly, if you take the S&P earnings growth over the last 50 years and you denominate it in M2 money supply growth, it's zero. There's been no earnings growth in the S&P 500 for the last 50 years if you denominate it in M2. It's basically all M2 growth, right? And so that's all of S&P, which includes a lot of bad companies. Berkshire would still beat that, right? Because they've been compounding at a much higher rate. So it goes back to, I think, kind of what we're talking about with Europe of like, if you just say like, hey, are stocks good? It's like an impossible question. Like, well, some stocks are good, some stocks are horrible, right? And so how do you find ways to enter into a market? And like the paradox of investing is you have to make good decisions, but usually the good decision is to put yourself in a position where you don't have to make decisions, right? Like the whole point of investing is like buy the great assets and hold them forever. And if you do that right, then like you make one decision and then you minimize how many other decisions you have to make, but all of the value you create is based on the original decision. So it's like this fascinating thing.
I agree with that. That's why we don't speculate in individual stocks or
I didn't even know that, but I figured. I could already tell that's what you do.
Yeah. Because it's too hard.
And by the way,
like,
it probably
everybody
works.
talks about what a great company Apple is or Facebook, but I could give a list of 100 companies that were just as attractive that year that are gone.
I already know that what you do works. I can tell just by talking to you for a couple minutes. Now my challenge is going to be how many times I got to email you until you buy just one Bitcoin.
I'm definitely connecting you guys over email.
And when you buy one Bitcoin, then I'm just going to be done. I'll never talk about Bitcoin publicly ever again.
He actually has his own cryptocurrency. It's called Bobcoin.
Bobcoin.
We're going for Bobcoin.
See, that's the difference. I won't buy Bobcoin, but I'm going to get you to buy Bitcoin.
Oh my God, this is good.
Touche.
It's the hidden facts of finance, random financial facts that may surprise you or even shock you. All right, first one, Bob. According to Social Security trustees' latest forecast, the retirement trust fund will run dry in 2033. After that, incoming tax revenue would be sufficient to fund only 79% of the scheduled benefits. Put another way, recipients a few years from now would face automatic benefit cuts of 21% if Congress doesn't act to avert those cuts. Man, you baby boomers take everything.
That's not true, Rye, and it's don't blame it on Congress, right? They just ignore it. They ignore it until the last hour. So you can ignore the problem with Social Security because at the last hour, Congress is going to save it.
The good news is, Dad, Ryan and Courtney and I are going to continue to work so you can continue to get your benefits.
I think we're gonna get benefits for like 89. That'll be when the first year you can collect your benefit.
Not only do the baby boomers have half the net worth in this country, but we're actually rooting for inflation, so our Social Security checks go up, to supplement our investment income.
I think they should just tell everyone under the age of 21 you're not getting Social Security.
It'd probably come to that, actually. Yeah.
I mean, all our plans that we run for anybody under 40, we don't include Social Security, do we, guys?
Yeah, I mean, if you just strike an age and tell everyone below that we didn't make the promise to you, you're not going to pay into it. Just you're already absolved from this, and then deal with the problem for everybody above that age group. But like by continuing to make promises to people today that you can't pay is just stupid.
And they don't vote. It's perfect, right? It's one constituent that doesn't vote. I mean, that's the big problem. Yeah. The problem is Bob votes.
Now, one of the bigger reasons there's no term limits.
Yeah. Well, I guess the only issue with doing that is you need more people paying in, right? Like that keeps the problem. So like you'd have to like find the right balance. But the whole thing is just, as a country, are we going to continue to do this? If we are, well, you either got to change something, change retirement age, change benefits, something, or just say, look, that was a program that worked for the people we promised it to. We'll figure that out. Anyone who we haven't yet promised it to, you're not going to get paid.
I mean, I like it, but I don't think it'll ever fly in the U.S. I don't think you'll ever get there.
Yeah, but first of all, I watched American Greed, and according to American Greed, that's called a Ponzi scheme.
Well, wait, but it's a legal Ponzi scheme.
For now.
Yeah.
Second fact, Chris, there were 1.52 trillion global net inflows of exchange-traded funds in 2024, beating the previous high in 2021 of 1.2 trillion. However, there were redemptions of 30 billion made from climate-focused mutual funds last year, ending 4 years of increases. We called it here on this podcast, ESG investing was a fad. It was going to go away.
Yeah, we definitely don't include that in our model portfolio at this point.
Well, it's like they pushed it for so long, and the reason that Wall Street pushed it was because, they could charge 40 basis points more or whatever it was. And that was like, we put Apple in your portfolio because that's ESG friendly. It's like kind of wild to me. I don't know if you were involved with ESG funds at all.
Wasn't it Tesla wasn't included in one of the ESG indexes, but like Chevron was or something? Like I forget what, like whatever.
So subjective. Yeah. Like
There's just like Tesla, the electric car company is not ESG friendly, but the oil company is.
Well, they did it the year when it was like 2022 when Tesla went down big, but energy prices went up. And they're like, wait a second. We can't include energy stocks because that's how they changed the script basically.
Yeah. I mean, the other thing that strikes me with all of the ESG stuff is like it starts with good intentions, right? People want to do good for the environment, all this kind of stuff. But I think Elon has proven that the best way to do something is to use the economic incentive. Don't use the like non-economic thoughts. So if you think about DEI, ESG, like you just go through all this stuff over the last couple of years, it was all like, we think this is best for the market, even though the market incentives don't bring us to this point. And so Elon showed up and was like, I'm just going to build an environmentally friendly company, but I'm going to do it because I'm going to build the coolest car. People aren't buying it because it's electric. They're buying it because it's a cool car.
Exactly. Because you want actually real demand. It's a fake demand. No, it's a great point.
It's like sustainable in the sense of not, you're going to have people who want to buy this. It is sustainable. That you don't need government subsidies forever, right? There's all these elements to, if you look across other areas where ESG became really popular, like what are activist investors? Like you can make a very good argument that activist investors were more ESG friendly than the ESG policies, which like blow people's mind. But like what activist investors do is they try to get better governance to drive shareholder value.
Which we found that they only make great value for themselves, but not the shareholders. If you look at it historically, so
Correct.
yeah. But to your point, right? Exactly. You could spin it any way, and I think that's what Wall Street caught on to. If you're BlackRock, like, oh, let's add a couple of ESG funds. Let's add another, 0.4, 0.5% to our expense ratio. This is a great deal.
But BlackRock's whole thing is just they surf the waves, right? Like whatever the thing is for the next 3 to 5 years, you got to be in it. Like you're the largest. You can't really sway from the mainstream kind of talking points. So ESG was the thing. They became really ESG friendly. Now I think they're actually backpedaling from that. Bitcoin and crypto is becoming this thing. They're like leaning into that. AI is going to be a thing. They'll start leaning into the data. Like they just keep trying to figure out what are the next trends. Let's ride those trends. Let's not rock the boat, and we got a good thing going.
It's like we're actively always happy to be the picks and shovels of whatever the next revolution is. Yeah. And I think as people don't understand that, it's because they don't really care. They're not invested in it per se. They just know they can charge you a fee to let you trade in it. Beautiful, beautiful business model. All right, Courtney, across the pond, the IMF expects global growth at a stable 3.3% cliff for both 2025 and 2026, slightly below pre-pandemic average of 3.7%, but actually slightly higher than projected growth here in the US. Who would guess? Global growth faster than the US. No one ever told me that.
Yeah, and I think this is something that's really getting lost right now where people are overly pessimistic on Europe and they're saying, yeah, well, it's cheaper, but it's cheaper for a reason. I don't want to be invested in it. We would actually argue these things are cheap and they are cheap for a reason, probably cheaper than they should be. You absolutely want to have a piece of this in your portfolio because if this continues to recover here, you don't want to miss out on that boat.
You run the American flag pump. How do you feel about that?
I think there's a difference between the European stocks and like European culture, society, etc. I think about Europe is a museum is like a pretty good meme, and America is like where all the innovation happens. But if you go and you look in Europe, there are some very, very good companies like Spotify, right, has done a fantastic job of creating value from scratch. And so I think that one of the things in Europe that's interesting is like it's dominated by these kind of industrial type businesses, holding companies, things that are really preserving wealth for a long time, but they're not necessarily growing wealth. Whereas America, a lot of it is net new growth. If you look at, the top 20 companies, how many of them weren't around 30 years ago? And so from that perspective, what you want is you want to probably have some exposure to Europe, to your point, and then you want to concentrate in what are the companies that are trying to grow versus, just kind of hold on and preserve. And, one of the most interesting stories is LVMH. Like technically they are that industrial kind of conglomerate type structure, but they've been very M&A heavy, which has led to lots of growth. So, it's kind of like if
Less
you just
organic
go and you
growth,
and
right?
yeah, if you basically just go and you buy, I don't know, a fertilizer company or something that's been around for 100 years, how much are they really growing? They're growing 2, 3, 4% year over year. But if you can go, you can find companies that are actually creating value and they're growing, then that makes a ton of sense,
Yeah,
right?
definitely been the story for the last couple of years. But I mean, also like arguably like Novo Nordisk, right? Their GLP-1 opportunity is just as big as what we have here in the States, right? So I think Eli Lilly probably isn't a better company. So I think to your point, to those global multinational companies, they don't really reflect just Europe, right?
The way that we look at it a lot of times is we're looking for companies that have some degree of innovation, right? And we think of it like value creation, right? If you're creating value for customers, solving problems, and things are new, then you likely have growth that's associated with it, whether that's revenue or stock price growth. But what you want to do is you want to go fishing in the ponds where people are ignoring. So, Europe is actually a really interesting place because everyone has written it off and they don't want to do the work. And so how many investment firms have like a European team?
Well, that's the thing. The underallocation there is incredible. So if it starts to do well, how much money has to get reallocated back to Europe, to your point?
Mm-hmm.
Yeah. Well, you sound like you're relatively bullish. We like you on Europe.
Well, I think that it is just I'm very bullish technology innovation, and I think that that happens everywhere in the world. Most people, though, they can't separate out. They can be bearish on a region, like on a macro basis, but they can be very bullish on specific companies, and it's because we've wired our brain really from investment portfolio construction to be okay. What's my U.S. portfolio? What's my European portfolio? What's my bond portfolio? Whatever. But like that's not how the world works. That's like humans. We organized our thought process that way. But if you unpack that, you say to yourself, like, what is the underlying foundation? For us, it is we want innovation in tech, right? And that can be innovation in tech applied to old companies, or that can be innovation in tech to the new companies. But like, if that's the baseline, then geography like doesn't matter,
Yeah, fair point.
right?
Yeah.
And so then you go and you find the companies where there's actual innovation happening.
Yeah, right. It doesn't have to be exclusively in the U.S. That's a great point. We just categorize
Yeah,
it
and
that way. Yeah.
one of my favorite things to remind people of is I worked at Facebook in 2014, 2015. When I left, 87% of the users were outside the United States.
Wow.
So even though
Yeah.
Facebook is considered a U.S. company, it's based in the U.S. Technically, majority of the user base was outside the U.S.
Well, it makes sense at 3 billion users or something like that. And let's face it, what are we at, 330 million people?
Yeah,
Yeah,
the
we
numbers
make
now.
up a big market cap, but as in terms of population, it kind of does make sense intuitively. Yeah.
I would bet the numbers now are more than 90% of the users are outside the U.S. But what's interesting is the revenue probably still comes dominantly or a very big portion of it from the U.S. Right? Like how well can you monetize India compared to the United States in terms of brand advertising, various products, right?
And willing to spend, right, on advertising versus.
So
right.
there's a
Yeah.
balance of how you kind of analyze it, but
Yeah.
these companies are more international than maybe we give them credit for, because we just like to look at like where are they headquartered,
Yes.
right? Like is
Yeah.
Spotify, which is not headquartered in the U.S., do they have more U.S. users than non-U.S.? I don't know, but like probably.
Well, it goes back to Novo Nordisk, right? Where are they selling all those drugs for obese people? In the U.S. So it makes complete sense. One last question.
All right.
Thank you. You've been so generous with your time.
Yeah.
This has been great. So every guest we ask this, what was the first song or album you heard when you heard it? It changed your entire view of the world.
Man, two things pop up immediately. One's hilarious and one is a little bit more serious. When I was probably 13 years old or so, my dad used to travel for work. So pretty
Okay.
much Monday through Friday, we rarely saw him. And one summer, my parents got the grand idea that we were basically going to like drive around the country wherever my dad had to go. And so I have 4 brothers, 5 of us. So we're in a car. And at the time, you either could, there was like a DVD player or they would play
Yeah.
music. And so we had CDs. And one of the CDs that my mom had was the Shania Twain album. And so if you've ever seen 6 dudes, 1 adult, 5 boys, driving down the road with, man, it's like I Want to Feel Like a Woman or whatever playing.
Your mom couldn't have been prouder.
So the reason why I say that is because the first live concert I ever went to, my mom thought we all liked the music. And she brought me, my dad, and I think one of my brothers to the Shania Twain concert.
Incredible.
And we were walking around, I'm like a 13-year-old boy. I'm like, where am I? I'm like another planet, right? So that definitely had a big impact. But the other one is music is very interesting because it really like programs your mind. And I did not control the radio or the sound system in Iraq, but you're driving and you have these headsets on and everything.
Yeah.
And I always think fondly of when we were leaving the gate of the base. There's one guy on our team who he would always play 50 Cent Many Men,
Nice.
which is like many men wish death upon me, blah, blah, whatever, right?
Yeah.
And I always think back like how surreal it felt. Like you're like, oh, wait a second, this is like real, like, whatever. So whenever I hear that song, I always think of like that moment where you're just kind of like with the boys.
It's a little too real.
Yeah, but you're also
Yeah.
like, just change up the music
Yeah,
next time.
yeah, it's a
Maybe
little-
go back to the Shania Twain or something, right?
I'll tell you what. Thank you so much for your service, by the way. That's an unbelievable story.
Of course. Thank you guys. I appreciate the opportunity.
Hey, hope you enjoyed episode 190, Pain Points of Wealth. If you like this podcast, you love this podcast, give us a 5-star rating on iTunes. If this is on Spotify, you can give us a 5-star rating. Subscribe to our channel. If it's on YouTube right now, you can like this episode. Subscribe to our channel. Click that notification bell to be updated every week of all our new content. That's it for this week. Stay loose and keep an open mind.
Thanks for listening to the Pain Points of Wealth. Hopefully, you found the ideas discussed in this episode valuable and useful for your own financial journey. You can find out more about Bob, Ryan, and Chris's firm, Payne Capital Management, at BeBullish.com or through the contact information found in the description of this episode in your podcast player or app. Join us next week for another episode of The Pain Points of Wealth, brought to you by Payne Capital Management. Information provided on today's show is provided for informational purposes only and does not constitute investment, tax, or legal advice. Investment is obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed.